everyone. Matt here from the real estate firm. I am joined by Marianne Elliott from 360 Mortgage Solutions, just to catch up and talk about coronavirus and how this is affecting the finance side of things and what she's seeing from her perspective. So good morning, Marianne. How are you?
Morning. Good, thank you. Great to see you again.
You too. Why don't you just start off, give everyone a bit of an introduction to yourself, a bit of background, and tell everyone who you are.
Yeah, Marianne Elliott. So as you said, from 360 Mortgage Solutions. My passion is working with first home buyers to get into the property market within their budget. So that's something that I mean, among all the other finance aspects I look at, that's my passion and where I focus. And I've been doing that for the last 3 years.
Yeah. And you've had experience before with commercial finance and stuff, hey?
I have, yeah. So I've got finance. I've been working in the finance industry for, I think it's over 16 years now. I've lost count a little bit. I've lost count of my age as well, so it's quite handy.
Yeah, that's all right. Hey, so thanks for catching up. I suppose first question is, how is it affecting things? What are you seeing out there? The response, what's happening from your end?
So I've seen a mixed response, predominantly with my first home buyer market. They are looking to hit the pause button. And I think that's because in uncertain times that they haven't been through the GFC that we had. They don't quite know what's going to happen. So investors who are quite keen to purchase, they know they want to grow their portfolio. And so they're not going to let something like this affect their buying. And then I've got the odd few that have left their pre-approvals open because they're hoping that if the market does take a bit of a drop, there might be some bargains there that they're ready to snap up.
Yeah, sure. Yeah, it's interesting about the investors because I think they sort of take a more longer term approach on it, and like interest rates are all-time low. So the fundamentals still in terms of borrowing finance are ridiculous at the moment. So for an investor, for anyone really, if you've got the right appetite and the right look at it, it's a good opportunity still, isn't it?
Absolutely. So I remember a couple of years ago, I saw the interest rates at 3.39, and I said to my husband, that is the lowest I've ever seen them. They're not getting any lower. And I've seen some rates at 2.19. They are absolutely low. Yeah.
Yeah. Wow. So is it a good time? Should people be fixing their loans or staying variable? What do you think with the way things are?
Yeah, that's a really good question. So I think that it depends on you and what your plans are. But the key to remember with fixing is it's not necessarily about saving money. It's about helping you budget and plan. So if you're in a point right now where you don't know what's going on with your income and your employment, you're a bit nervous, potentially fixing could be a good thing just to help you lock in that low rate and have a bit of peace of mind for the next couple months or next year or so. But certainly variable, long term, so the 30-year term of your loan is what's going to save you the money.
Yeah, right. Okay, that's interesting. And are you seeing most banks or most lenders are passing on the rate cuts that we've had recently and passing on the like the mortgage holidays that are being talked about at the moment? Is that happening?
Yeah. So I really want to talk about those mortgage holidays. But firstly, to answer the first question, when we had the rate drop to the 0.5, which was just a little while ago, pretty much all the variable rates started to drop and the fixed rates stayed where they were because the banks didn't really know long-term what was going to happen. Then the other day when the Reserve Bank met again and lowered the rates, that's when the fixed rates dropped. So pretty much across the board, I've seen all the lenders pass on a rate cut in the last 1 month. The repayment holiday is a really good one. So when they say repayment holiday, it makes it sound like you're pretty much hitting the pause button on your home loan and having a bit of a break and then coming back to it in 3 or 6 months' time. So I think it's really important that people understand what a repayment holiday actually is because it's still charging you interest on top of your loan. So it's not hitting the pause button. All it is you saying to the bank, for the next 3 or 6 months, I'm not making a repayment. You're just going to charge me the interest and add it onto the loan, and I'll eventually pay that interest off over the rest of the loan term.
Yeah.
So it's absolutely fantastic that the banks have come out with this offer for people that need it. But remember, you don't want to get to that point. So if you're still working, if you're still able to get a job and get some income in, leave the repayment holiday for when you can't get any work, you're really tough, doing it tough on money, then take your repayment holiday.
Yeah, sure. Okay. So in that regard, I mean, some people are probably looking at it going, should I pause it now and make the most of the 6 months? Or like, I may not be able to do this in 12 months time or at another time during the loan. So should I just do it now? Or you think wait until you really need it, as it's a last resort, really? Yeah.
In my opinion, it is, because financially for the long term, you're capitalizing on that interest, which is going to cost you more for the rest of the loan. I get what you're saying there, because a lot of lenders have come out and said, because of COVID-19, if you hit the pause button on your mortgage, it's not going to be tracked on your credit file. Whereas typically, if you're in a hardship situation, it does get recorded on your credit file. Whether that is actually the case or not, we're just taking the banks and lenders' word for it that it's not going on the credit file. But that's a good point, and I think it's case by case. You're not going to get an offer like this outside of COVID-19, but then hopefully you wouldn't need it.
Yeah, sure. Yeah. And so are all the lenders doing that as like a government directive, or are some of them still not offering that?
From what I've seen, all the lenders are offering it, from the big four all the way down to the third tiers. Yeah.
Yeah, cool. Okay. So with regards to people getting finance and whatnot at the moment who are still buying, are you seeing it have an impact on, one, getting the finance approved and getting it through, the time frames? Is it taking longer? Are people able to settle? They're getting money at the settlement? Like, how's all that side of things with the actual transaction being affected?
So I've had a lot of lenders who have slowed right down, and they are predominantly the lenders who offshored a lot of their processing, because offshore shut down. They've had to move it all back onshore and pretty much train their staff to do the things like answer the phones and doc prep and get ready for settlement. Right. So that's slowed down a lot of lenders, but there's still some amazing lenders out there that can have a really quick turnaround time.
Yeah.
There's also lenders that will do desktop valuations, providing you've got a big enough deposit. So, that saves clients having to organise a valuation, having someone go through the property, getting a desktop valuation, and they're accepting it based on that.
Yeah, right. Okay. You're seeing that happen a fair bit now. People, I suppose, trying to keep distance and do the valuations on desktop or virtually.
Yeah, pretty much. I will do a desktop valuation to start with, and if it comes in at the right amount, I don't need to do a full valuation. There's also been a lot of valuers are now just doing what we call a curbside valuation. So they'll drive up to the property, look at it from the curb, and then assess it without actually going through the property.
So you mentioned before, we were having a bit of a chat before this, that all your really keen buyers still have an appetite to buy, don't they? It's just mainly your first home buyers that are maybe haven't been through a situation like this or a bit nervous, understandably, just putting it on pause. But your keen buyers who either need to move or understand that property prices will, as they always have, continued to go up, in cycles. They're still wanting to buy, correct?
Yeah, absolutely. Yeah.
Yeah. Okay.
And I think also if you're smart about it and you play your cards right, you could get yourself a bargain in the next couple of weeks that will quickly recoup its value. So you're going to build equity faster if you're smart about it.
Yeah, for sure. I mean, there certainly will be a few sellers who will want to get out, for probably cheaper than what they would have elsewise in this market if the situation continues. But that's probably the biggest thing, is that we don't really know how long it's going to go on for. So I think for everyone that makes it difficult. So
yeah.
Do you know much about, the government has come out during this time with some things for small business loans and financing, and up to $250,000 for business loans. Are you across that side of things?
In my opinion, remember that whatever you're doing, if you're doing a business loan because you're worried about cash flow, remember that you still need to pay that back.
Yeah.
And what I mean by that is, as you said before, we don't know how long this is going to go on for. So if we could say this is a 3-month interval, and you know that you can make ends meet for the 3 months with the new business loan, and then start making your repayments when the cash flows back up, that's fine. But this could be 3, 6, 12. We just don't know how long it's going to take for the threat of coronavirus to leave, and then for the economy to build back up afterwards. So I would really think about that before jumping into any future debt.
Yeah, sure. And that's the whole thing with it, isn't it? Is that while we're getting these relaxations and, you know, access to all these things, which is great for people who need it, but at the end of the day, you still have the debt, and it still needs to be repaid at some stage. So, just keep that in mind for people who do need it, I suppose. Yeah. And so the banks are still more than willing to be lending at the moment. They've still got a big appetite for getting finance deals done.
The appetite is definitely still there. The only thing I'm starting to see, and this is as of yesterday, is lenders are asking more questions about your employment. And that's just them doing their due diligence and making sure that you are going to have an income for the next however long.
Sure. Yeah. Well, it's good that there's still the appetite there from lenders to get the finance deals done, which ultimately pushes real estate along. You know, we can still do the deals, albeit restricted to, not auctions and private appointments. But at the end of the day, the end result is still there for people who want to buy or need to sell, and vice versa. So that's really good. What's your outlook once we get through this? Like you say, however long it is, what do you think is going to happen in the finance space?
Okay, so this is just my opinion, but I think that once we get through this, everything's going to fire up again, but it's going to fire up over 100%. I just know that with all the clients that I've got that have hit the pause button, they're ready, they want to buy. It's just what's going on in their current environment that is making them hesitate. So I can see once the threat's gone, they're all going to fire up again, and that's going to mean that all these people that want to sell are going to say, now's a great time, let's get it on the market, because there's buyers out there that are wanting to buy and are ready to buy. So I think, I hope that we have a really quick turnaround, and full steam ahead.
Yeah, I'm much the same. I think once all this, probably for everyone in not just real estate, but all industries, everyone's just going to get straight back into whatever they were doing full on, because you sort of take for granted a little bit that you can't leave the house as easily, you know. So, but real estate
I'm going to get my nails done, my hair done, I'm going to eat at a cafe.
That's it, all these things, which, go to the footy, all the rest of it. So, but real estate wise, I think it'll be a quick bounce back, and it'll be an influx, and that'll hopefully be really good. So it should be good.
Mention that if you are struggling or finding it tough to meet your repayment, I have a link on my website that you can go to, or you're more than welcome to touch base with me, even if I'm not your mortgage broker, just to chat about your options and what you can do. I've had quite a few conversations with clients who are nervous about losing their job, and touch wood, so far none of them have, but you just never know. So I'm more than happy to have a chat and bounce ideas off people if they're struggling.
Fantastic. We'll get all the details and links to websites and whatnot to put it with this. So that's really good. But thank you very much for your time.
No worries.
All right, I'll talk to you soon.
Cheers, thanks.